when we're looking at kind of what we can do for a client, there's a couple pieces there, and I'm going to make it just I'm going to oversimplify this, right? It's what's the building worth? What is the building worth? What is going on in the market? Ultimately, whether we're going to equity partners or debt partners, how do we justify when we say, we want to borrow $10 million because this building is worth 20? Well, why is it worth 20? Right? We got to justify why it's worth 20 to whether it's a lending partner or an equity partner. That information is coming from tools like CoStar, Real Capital Analytics, CompStack. There's a number of sources out there that would provide you what like other buildings have sold for. So the same thing when I want to know what my house is worth, I might go on Redfin and look at what the neighbors sold for. In the commercial real estate market, I'm doing the same thing. What cap rates do they trade at? What price per square foot? Then we're also going to look at lease comps, right? Because let's just pretend it's a retail shopping center with 3 tenants in there. At some point, those tenants might leave. So I want to make sure, looking at what other retail buildings have leased at, did they sign leases at higher or lower rates? Is the building that I have, is it, if everybody left, could I replace that income? Would it be more or less? So we're kind of looking at those comps, those market data. Tools like Moody's that provide kind of cap rate data are great. There's so many good resources out there. You probably could go to any large brokerage firm's website, read their research report, kind of understand. I'm sitting out here in San Diego, understand kind of in San Diego where cap rates, investor supply, demand. So that's kind of understanding the market and the property. The other piece of this, and this is kind of where all of us collectively, us on this call and those of us in the industry, we add value in what we're charging for, is understanding, what's going on, what are the rates, what are the comps, who are the players on the providing you capital side. So from that standpoint, right, somebody's ultimately hiring us because they could walk into the bank across the street and somebody could say, okay, it's 70, we'll give you 70% leverage and your interest rate is 5%. Ultimately, what we're saying is, hey, hire us, hire me, Bryan Doyle. I know 300 capital sources, 500 capital sources, you name the number, but I know who is most active in, office lending in the San Diego market. I'll get you more quotes, more information, and provide you a menu of options to pick from, right? That's the value we're providing. Maybe it's agency debt, maybe it's CMBS. And that information comes from just being part of a platform, right? I'm one broker. I might be doing 50 deals a year. There's probably 100 other brokers that are also doing 50 deals a year. Every time they do a deal, they're talking to 20 lenders, maybe a couple equity partners, and we're sharing that information. So any moment in time, I know who likes retail shopping centers in the suburbs, and I know what rates they're offering. Are they offering 5%, 6% rates? And that changes daily. We all, in this industry, the Federal Reserve rate changes, the markets change, people's appetite for certain deals change. So we're kind of getting that from the platforms that we're part of. And if you're not part of a large platform, you're getting that from doing deals, calling lenders, talking to lenders. Ultimately, that is your job in this industry. Versus an owner, his job is probably developing. His job is probably maybe being a lawyer or a surgeon, provides him a high income to invest in deals, or maybe he runs a fund over at Blackstone. Long story short, they may only talk to lenders a few times a year. If you're talking to them daily, your idea of who is the most competitive, who to go to, what rates are available, that's kind of your value add. So that's just being in the market, talking to people.